Taher Badshah is now joining us. He's Chief Investment Officer at Invesco Asset Management Company. Taher, great to have you with us here on the program. Thank you very much for your time.
Morning, Prashant, and sorry for the...
You've been, no problem. You've been a bit cautious all through, a little watchful because of valuations and the run-up, etc. How are things looking now, Taher? I mean, we had Samir with us earlier, Samir Arora of Helios, who was saying that market can give up 5-10% easy. Not, of course, immediately, but from here, from these levels. Any thoughts at an aggregate level on the market from here?
So, up until yesterday, I mean, everything was on the table. Like as I mentioned the last time around, that, markets are at a stage where after the recent rally, the risk reward was relatively more balanced, and it was open to risk because many of the uncertainties which were around had not completely vanished and could come back on the table. And one such risk, once again, in the form of interest rates and inflation has come back over the weekend. So I think things will look a little tentative from here on. I really don't know how much of correction can be possible after this, probably about 15% rally from recent lows. But yes, I think if we probably get to levels which are at which the markets once again trade below their averages, and we had moved a little above our averages in the last move of the market. So I think probably a correction of around 8 to 10% can probably put markets at less than 5-year average once again, and that becomes a comfortable point in my view. I think things will remain a little uncertain in the sense that there are both the factors which are at work. There's a tug of war in a way which is going on between the Fed and the consumer in the US. The Fed will try to do as much as it appears in terms of controlling interest rates and controlling inflation, and therefore raising rates as much as possible. On the other hand, the consumer out there is very, very resilient, so it's not going to give up very easily. It's not going to give up very easily either, which basically means that it's going to be a tough battle over the next 4 or 5 months, 6 months between the Fed and the consumer, and we'll have to see how it goes. So what we'll see is a duality. You will see a situation where interest rates in the US at least continue to rise, and at the same time, you will probably also see growth indicators or economic indicators staying reasonably resilient too. So that's going to be a kind of a dilemma that probably the markets will have to face, and that will bring its own attendant volatility. In the meanwhile, however, in India, I think things are reasonably fine. It's very difficult at this stage to point out something which is significantly amiss as far as the Indian economy is concerned. But of course, the follow-through of rate hikes, etc., in the US will probably have its implications. Meanwhile, we'll probably also need to see as to what's going on in China. That's something that still remains relatively unclear at this stage. And all that could probably induce that volatility, which could probably bring markets in India maybe less than their averages. And that's probably what the downside looks like.
In fact, we have learned from this entire episode that the best time to buy, Taher, is when the worries pile up, right? Especially when the global markets act up. Perhaps that is the best time to look at Indian stocks. So if this run does continue on the downside, courtesy global markets, one wants to invest perhaps for the longer run. What would you look at? Where do you see pockets of value now?
So I think, for some time, I think we've kind of been looking inwards. We've been looking at the domestic opportunities a lot more than the global opportunities. Things at home appear to be relatively more, provide a lot more confidence across different kinds of sectors. Some part of it we have seen coming through in the form of a rally, whether it be in some parts of consumer discretionary, autos, industrials as well. They played out pretty well over the last some time, but they still remain go-to pockets for us on corrections. I think financials has been something that we have pursued for a very long period of time, and that's also an area which remains comfortable for us. So I think domestic stories largely, at least from a growth standpoint in the near to medium term. Meanwhile, Sonia, I think pockets of value are also will start developing or have started to develop in some of the globally oriented sectors, particularly tech, for example, is going through a fair bit of its own, rough journey. But I think somewhere, at least for our value strategies, we think we are getting into a mode where for the next 3 to 6 months, it'll be a good time to, look at these from a value standpoint, not from the point of view of immediate returns or from the point of view of, seeking immediate catalysts out there. But I think sheer value is starting to emerge. And that can be played from a 12 to 18 month perspective, I guess.
All right, I just hold on to that thought. We need to take stock of the markets. A good 100-point recovery is what we've seen from the day's low. More than 300 points on the Nifty Bank. That was the one that took a hard knock in the first couple of minutes, and that's seen a good recovery as well. Breadth of the market, for whatever it's worth, you had only around 180 stocks are advancing. At least that number has moved to around 350 stocks odd. So just keep an eye out on that as well. Hi, Taher. Good speaking to you after a while, actually. What about the auto stocks? I think that, you guys were relatively positive on them. And, that has worked out, actually, because everyone's, now talking about autos, auto ancillaries as well. Now, bulk of the good news is known, which has to play out in the second half of this year. Cooling of, commodity costs, easing out of chip shortage issues. But what from here on? What's your preference in that space?
So yes, you're right, Nigel. We've been reasonably positive, but things play out very, very fast in these kind of markets, and I'm surprised to see the kind of momentum which has built up so fast in this sector. Of course, some of the things have started to fall into place. So our preferences within the space has been for the four-wheelers more over the two-wheelers. Most pockets of the four-wheelers, whether it is commercial vehicles, parts of passenger cars, as well as maybe even agricultural equipment for that matter. So I think that still remains something that we prefer, but we've seen a decent climb in valuations responding to some of the enthusiasm which has started to develop around the sector, whether it is in terms of return of the consumer, whether it is in terms of demand, new model introductions, easing of commodity costs, steel prices, and so on. So I think we are somewhere in the mid-cycle of the auto consumer play where probably businesses are still mid-cycle, valuations are somewhat above mid-cycle, having played out. But I think earnings will remain reasonably strong and visible. So there will be one pocket at least, Nigel, where we probably will not have to contend with a lot of earnings disappointment as we go into the next 2-3 quarters. And that should keep investor interest pretty entrenched, even though the sector has seen some decent moves in the last couple of quarters.
Taher, just to clarify the last bit of the last answer, you were talking about IT, which looks good from 12 to 18. Yeah, sorry.
Yes, to the last answer, yes, I was looking at IT as a value play emerging over the next 12 to 18 months. It's always difficult to actually pinpoint what will be the triggers, and especially in things which get into a value zone. But that's exactly what happened even in autos at the start of the year. There was, as you know, autos was not really a preferred sector within the market, and most of the things around it were negative. But things do change, and valuation had become attractive at that point in time. So I think something similar can unfold, and some of in
terms of IT valuations, or you're saying valuations should get better?
So valuations are getting attractive, is what I'm saying, with this massive underperformance that we've seen in the IT space over the last throughout calendar year 2022.
By the way, just want to point out, I know it seems like it's all gloom and doom on the markets, but there are some stocks that are bucking the trend. Syrma SGS, which was the new listing, is up another 9% now. And in any case, this electronic manufacturing services space has been doing really well. And Syrma has had a very good listing, and it's up a second day in a row. Any thoughts on this one, Taher, before we let you go?
Well, we've not looked at this company. We've not invested in this IPO. So, but I think the space looks attractive, and there are a few other candidates also which are in play, and they've done even they have corrected, and the meanwhile valuations are attractive. I think the space still looks attractive to us. Anything which is more domestic oriented, like I said, Sonia, is something which we need to examine very, very closely, and that's what we are focused on.
We had Dharmesh on Friday with us, who was saying that there are more of these kind of companies which are going to come with IPO. So there's Amber, there's Dixon.
Yeah, he gave a long list of companies that are expected, a few hundreds, I think he said. And
that was the overall list, but like Syrma and the contract manufacturing, electronics contract manufacturing space, the EMS space, there are a bunch more.
I think Syrma, they got it right on numerous things, right? One was on the pricing. If you compare it with Dixon, you have a big revenue potential from here. They 1,200 crores last year. They can do close to 4,000 crores at optimum levels as well. And the money coming back to the company, well, you like to see that, right? You guys quite often talk about some of these OFSs where the money goes to the promoters. So at least, from a psychological perspective, you're saying, okay, the money's coming back to the company, so you like that.
And given how well the peers have done, right? Dixon and Amber have been multi-baggers in the past. I guess that's the expectation with this one as well. But Taher, thanks a lot for joining us. Have a great day, week, and we will touch base with you again later. Hope to see you more frequently on the channel.